ABC Listen. Podcasts, radio, news, music and more.
Hey, Jules and Jez here. Now, Jules, you've become a bit of a TV correspondent for us lately, haven't you?
Yeah, someone's got to do it, Jez. I've been watching White Lotus. No spoilers, but I really want to talk about why we have this obsession with watching rich people being very unpleasant and very unhappy.
You can find Not Stupid on the ABC Listen app.
Donald Trump said he'd do it, and he has. 104% tariff on all Chinese goods entering America is now in place. So, given China is our largest trading partner, and so many other countries, including Australia, have been hit too, what does it mean for us? Today, economist Susan Stone unpacks it all, including what the tariffs will mean for our own hip pockets. I'm Sam Hawley on Gadigal land in Sydney. This is ABC News Daily. Susan, wow, what a week. The stock markets, I mean, how intense can you get?
It has been a ride.
Another tumultuous day on the New York Stock Exchange.
Traders assess deep losses as a sea of red sweeps across the Australian Stock Exchange.
Global markets are deeply in the red for a second day amid fears of a trade war damaging economic growth.
The Australian share market closed in correction territory, down more than 4%.
For the year, we're off about 9.5%. And when you look at from the peak back in February, we're down well over 10%.
The markets really have been reacting, even though they haven't been as bad as some instances in the past. We've seen volatility from the global financial crisis and also from COVID, but it's still pretty bad.
But this is pretty different, right? Because it comes down to one man. It comes down to Donald Trump.
And I really think we're helped a lot by the tariff situation that's going on, which is a good situation, not a bad. It's great. It's going to be legendary. You watch, legendary in a positive way, I have to say.
And that is very true. It is the policies of one person or one country, if you will, and how they're having a flow-on effect to every other country.
Many countries have. They've ripped us off left and right. But now it's our turn to do the ripping. That's okay.
Yeah, all right. So we're left sort of second-guessing at this point what Trump is up to, what he's going to do next. And that's why is it investors are getting rather freaked out, so they're selling their stocks. Just explain that.
What's happening is that as companies make decisions about buying and selling and the price they're going to buy and sell at, they expect a certain level of profitability, and then investors buy their stock based on that profitability. Because Trump has put on tariffs on every trading nation and even some that don't trade, costs have overall gone up for all businesses. So all businesses need to reevaluate their profitability and probably reduce that profitability. Therefore, investors are now not willing to pay as much for the stock, and they're selling those stocks that they think they've now overpaid for.
All right. Well, Susan, what I really want to do with you is focus on what this all means for Australia, for our economy and for our personal finances. Now, Jim Chalmers, the Treasurer, he's been meeting with key economic figures, bank bosses, members of the RBA. He's pretty worried about this.
Well, I can see that it would be a concern in the sense that Australia is a small open economy, and by that we mean our economy relies a great deal on trade. So if that becomes more expensive, then our goods become relatively more expensive, and it might be more difficult to sell them overseas. He's probably also worried about what this means for investment, whether Australia will continue to be a place that countries or other investors want to put their money, and what happens to many super accounts that have large balances in the U.S.
All right, so let's get to the super accounts in a moment. But why don't we start with the Australian dollar, which is performing appallingly?
While the US dollar is falling after Liberation Day, the Aussie dollar is falling more. It's down 5% since April the 2nd and dipped below 60 US cents for the first time in 20 years.
What is going on with that? Just explain why the Australian dollar is dropping so dramatically.
The Australian dollar is really very much tied to the Chinese economy. If there are fears that China will be somehow hindered, if its growth will be reduced, if it won't be able to continue to import to the degree that it has been Australian goods, then they don't need Australian dollars. And so they don't buy Australian dollars and the price of Australian dollars goes down. And that is what we're seeing happening. A lot of investors and businesses feel that China's growth is going to be significantly impacted and therefore they won't be in the position to buy as many goods from Australia.
And it's not good if you're planning a trip overseas because once you've got there, things are going to be rather expensive, aren't they?
That's true. But I mean, not all currencies have depreciated. Some currencies, the Australian dollar has kind of maintained. I think New Zealand is probably still a fairly good buy. And some Asian countries have maintained a good dollar currency relationship.
All right, so the Australian dollar, it's taken a hit given the uncertainty, of course, over Trump's tariffs and the fact that they were really a lot larger and more widespread than people had anticipated. Let's look at how else it could play out here, Susan. Interest rates, we'll come to that. But what about super funds, our retirement savings? Just remind me how they work and why they're affected at times like these.
Well, because the super funds don't just invest in Australia, right? They invest globally. And to the extent that global markets have been affected by these tariffs, we've seen declines in Asia and in Europe. So it's been a broad-based readjustment in terms of values. So that is impacting super funds. But already some of the markets have had a rebound, if you will, or they've stabilized. Unless you're going to have to withdraw your super fund today or yesterday, most Australians can probably wait it out to see the markets kind of come back to equilibrium.
But some Australian super funds, they have invested in a lot of the really big tech companies like Meta, like Apple, like Nvidia. And as an example, at the end of last year, Apple was worth more than 6 trillion Australian dollars. And as of Wednesday, it's down to $4.3 trillion. So it's taken a massive hit.
Well, Apple is particularly exposed because it has many production facilities in China and across Southeast Asia. And these countries were particularly hit by tariffs. So their costs are expected to increase tremendously. I saw an estimation that iPhone 16s could go from $1,500 in the U.S. to $2,300 because of the tariffs. But as I said, there's lots of opportunity for these particular stocks to return to a level that we've, are more used to.
Yeah, there are figures around that Australians have lost around $170 billion since the start of the year through these super funds. What does it mean for people, though? I know that a lot of people don't need these funds just yet, but if you are drawing on them already, have you taken an actual financial hit this week?
Well, it really, as you point out, it depends on what the stocks you have invested in your own particular portfolio. It really is a very individual kind of circumstance for what's going to happen.
All right. Okay, Susan, let's turn to interest rates then. In such a short time, we've gone from talking about potentially one more rate cut this year to the Treasurer, Jim Chalmers, pointing to financial market bets that we could get 4 cuts in 2025.
Markets are now expecting around 4 interest rate cuts in Australia this calendar year. There's even a more than even money expectation in the markets, more than 50% expectation in the markets that the next Reserve Bank interest rate cut in May might be as big as 50 basis points.
What a turnaround.
Right.
So explain why that is.
Well, there are increasing fears of a global recession. And to the extent that that has an impact on Australia, there's going to be concerns to keep the Australian economy moving along. Growth has been fairly good. It's expected to improve over to 2025 and into 2026. And I'm sure the desire to keep that growth supported through interest rate environments will play into the number of cuts that come on this year.
So just to clarify, if the RBA doesn't stimulate the economy more, the fear is that we could be pushed into a recession of some sort. So they want to cut rates so people spend a bit more.
And the businesses can continue to invest. I mean, a lot of this has to do with maintaining a good, robust business investment climate so that they can continue to produce goods and hire people and do all those things that keeps the economy going.
All right. Well, we know that Americans, because of these tariffs, will be paying a lot more for things, including, of course, those Apple phones. But what about us? Will we be seeing a spike in costs of things, or are we insulated from that?
Well, to the extent that our goods that we're importing are affected by the tariffs. So, okay, you're going to have companies trying to import their goods to the U.S. And to the extent that those goods are being processed and then exported from the U.S. to Australia or other countries, we'll see an increase in prices that way. We may see a slight increase in the price of cars, imported cars, or other types of white goods or products like that. But to the extent that we're buying goods that don't go through the U.S. market, so maybe not exposed to those tariffs, it won't impact us as much.
All right. So, Susan, it does sound from what you've said that we are better placed to weather this storm than some other nations, but we won't be unscathed completely. As you said, we've seen this before. We've been in this difficult position before during the global financial crisis and during COVID. During those times, of course, the government really stimulated the economy with giveaways, if you like. They spent a lot of money on stimulus packages. Just remind me of that.
That's right. I mean, when we looked at the global financial crisis, the government really stepped in and provided backup financing and provided funding. COVID was different in the sense that businesses weren't able to operate at all by government decree. And so they were supported by government in terms of grants or loan forgiveness. This situation is completely different. This is just a one-off kind of policy imposed from the outside, from another government. So it's unlikely that we'll see those kinds of handouts, if you will, from the government.
Well, Susan, what do you think? If Trump decides to stay the course and to perhaps even increase the tariffs he's imposed on some countries like he's done with China, could this get a lot worse? Can we predict what might happen if he does that?
Well, there are lots of modeling that's going on that has all these different scenarios. And of course, it is not a pretty picture. Just the U.S. and China alone is going to impact the global economy. These are the two biggest economies, and the trade between them is significant. And so therefore, we could be facing a situation where this does push companies to the edge and many go out of business, and we do find ourselves in a recession. The extent to which some of the trade can be shifted to other countries and leaving the U.S. out, we'll probably start to see that happen at a quicker pace if these tariffs look like they're going to be in place for a while and businesses really do need to rethink where they're buying or where they're processing their products. And that may help avert a more significant impact on the global economy if we're able to do that. It's not going to happen on a dime. These things take time to shift around, but we probably will see much more movement away from the U.S. or from global value chains that rely significantly on the U.S. market.
All right, well, fascinating time to be an economist, that's for sure.
It is.
Thank you so much, Susan.
No worries, thank you.
Dr. Susan Stone is the Credit Union SA Chair of Economics at the University of South Australia. This episode was produced by Sydney Peed and Adair Shepherd. Audio production by Sam Dunn. Our supervising producer is David Cody. I'm Sam Hawley. Thanks for listening.